Hey guys, welcome back. You're still tuned into Trading Hour. We have a management waiting by. CONCOR is in focus. The stock is up around 12% this year. We have Mr. V. Kalyana Rama, who's Chairman and Managing Director of CONCOR, joining us now to discuss the way forward for the company. Sir, very good morning and thank you very much for joining us. This is Pavitra. I'm going to come to all of the financials in just a minute, but if I can start with the land license fee. What is the latest? Have you heard anything yet on that front? And your Q1 was at around 95 crores. So can you tell us what you are expecting for the full year?
Yeah, full year, as we gave the forecast, it is around 450 crores. So a little bit here and there, but we go with that target. It's a 6% of the market value of the land. So last year also it's the same land licensing fees. So this year it is continuing. As of now, there is no change in that policy.
It was expected that, we were hoping that it would go down to around 3%. So you've not heard anything on that front at all about a decrease from 6 to 3%?
So that's, yeah. As of now, the policy is the same. It is 6% of the market value, industrial market value of the land. That's very clear. There is no doubt in that. So if at all there is any revision, definitely it will be notified to everyone. As of now, there is no revision.
Absolute number you're saying will be 450 for the full year?
Yes, 450 crores. That's what our estimated. We estimate that, okay. And that is where we keep our books. So we keep some provisions and all that. So there's a little bit of calculations. So industrial values, the revenue authorities, they will be fixing up. There may be some changes somewhere. So we got 27 locations, so we keep these things updating every time. So every 6 months, land revenue authorities, they change their land value. They continue with the same land value, or they may revise upwards or downwards. So it is an approximate figure that 450 crores per year will be the land license fee for the railway land we are holding.
And how much of this 450 crore have you provided for?
That is already there is in the first quarter balance sheet, isn't it? So there's already, we provided the 1/4 of it. There is, so there will be a little bit of adjustments in the balance sheets. So when you look at the final figure in the year, that is what I am giving you the estimate, it will be 450 crores. So it will be provided in equal tranches. So the 4 tranches. So we have already provided for one, for the quarter 1, then we will be providing for the other 3 quarters, and in the final balance sheet, it will be adjusted as per the land values notified by the revenue authorities.
Good morning, Mr. Kalyana Rama. In terms of your guidance for FY23, I believe you have said there will be, in terms of volumes, over 5 million TEUs, right? But while the EXIM portion is the bulk of this in terms of numbers, but the incremental growth is coming from the domestic business, right? So can you give us a sense of how in FY23 this might pan out? Do you expect the EXIM export-import segment to pick up once again, and by how much? As well, how much can domestic continue to contribute?
Yeah, it's a very good point you raised. So let me come out on this. See, the domestic growth, what we have seen last year, is around 35%. And after that growth, again this year we are witnessing almost 30% plus growth in the domestic. So this shows that the containerization trend is picking up in India. Yeah, compared to the developed markets, the containerization in India is slightly on the lower side only. So there is a good scope for containerization to pick up. As well, we have started giving some good business solutions, the logistic solutions to the industry. One such I discussed earlier also, the cement movement in normal containers, bulk cement movement. So movement of these commodities in bulk in normal containers, whereby we can reduce the logistics cost, not utilizing a special type of container, is going to be a game changer. And it is going to give us volume. So now that segment has not yet picked up. Let me tell you, the growth 30% which is coming out of the traditional goods we were carrying for last 5 or 10 years. Now these new cargo lanes we are starting will give a further boost to the domestic market. So we are expecting good growth in domestic segment. So that is why what we did, we already released 18,000 containers manufacturing order for Indian manufacturing firms. Here we are trying to develop India as a container manufacturing hub. So we gave 6,000 containers order as a development order to 4 firms. Then we released one global tender, and I am very happy that one Indian firm has backed this order, which is located in Gujarat, all 10,000. So that also we released. So we are expecting a good growth in our domestic demand, and we want to pick up containers. Because today we are holding 37,000 of our inventory, trying to add another 18,000 which we released orders, and further we will increase. And maybe something like we are looking at a figure of 1.5 to 2 lakh TEUs to hold in the domestic segment in next 4 to 5 years. That is the sort of demand we are envisaging in the domestic market. So this gives a CAGR of maybe around 15-20% for 5 years. We expect that sort of demand. Coming to export segment, exports, the imports are still not picked up in India. Exports are doing well. So we are given the scheme of the repositioning of empty containers from port to hinterland, that we are continuing for this full year, giving a 50% rebate, which is helping exporters. So here let me just come to a point where last year when there was a lot of shortage of containers, we used our containers to send some export goods to Iran. So that was a nice experiment, and it was a successful experiment by us. So we will be looking at these things also. So the entire this demand domestic, so we will be connecting some lanes, trying to help some exporters. And export market, I am sure, will pick up because the manufacturing sector in India has started performing. So let's hope that export import also the demand will pick up. As of now, the import is slightly on the lower end.
Okay. Any guidance for EXIM volumes for this year?
Guidance I am not changing because it's still the time is there, and the next 2 quarters we hope the things will settle down and we'll perform well. So guidance of that 5 million what we are working on, I am not changing at this moment. We are working on that 5 million. So the domestic EXIM proportions may slightly vary by few percentage points. Last year we did 70-30 in our revenues, and in volumes also near that number. So this year maybe domestic may go by another 1 or 2 points, while EXIM is imports at low ebb. But we are working towards trying to achieve that 5 million TEUs. Let's see, the target we are not revising as of now.
All right, so you're maintaining that guidance for the EXIM growth. If I can also ask you on the margin front, it's been quite flat around 24%. Pre-COVID and, a couple of years ago, FY19, FY20, we did see levels of 26%. When do you think you can go back to that?
See, margins of 24% are very good margins in the logistics industry. So actually now after the COVID, we are trying to help the industry to pick up. So instead of increasing our margins, we are trying to maintain the price lines. Little bit of increase, inflationary increase we did here and there, but otherwise we are trying to maintain the price line to help the industry. So that 24% is a very healthy margin. So that we are not very greedy on going above on this at this moment. So we are trying to help the industry and pick up the volumes.
So we can expect around 24% for this year as well?
Yeah, that will be the thing, yes.
Okay, margins of 24% and the volume guidance is maintained at 5 million TEUs, though it may shift more in terms of domestic volumes rather than exports, but on the whole, the volume guidance remains intact. So what about Capex? Could you give us the Capex guidance? How much do you think CONCOR will be spending?
See, Capex, other than the containers and rolling stock, this year we will be spending something around 800 crores, 600 to 800 crores, depending on the land availability, which we are working on some terminals. So, but on the containers procurement and rolling stock procurement, we actually planned for almost spending 8,000 crores in next 5 years. That is from the last year onwards, and the program is going on. As I mentioned, 18,000 container order is almost around 700 crores release. So these containers keep coming in not in the completely in this financial year, but over the next financial year also. and we'll be further releasing. And we are procuring 230 more rakes. Last year we added 33. Now there is some wheel shortage problem in India. So we are trying to import wheel sets. So once we start getting wheel sets, again the rakes start rolling out. So that also we got a program of 230 rakes. That is an investment of almost 4,000 crores. And further containers and further addition of the rolling stock and the handling equipment. This capex is around 8,000 crores over the next 4 years. So overall, if we see next 4 years, we will be spending a capex of around 8,000 to 9,000 crores. So that was the guidance given by me last year, that we will be doing a 10,000 crores capex in the next 5 years.
All right, Mr. Kalyana Rama, thank you very much for joining in today, and we hope to touch base with you soon again. All the very best for the coming quarters.